Okay, hello everybody, welcome. We're gonna get started. Tesla is down 6%. Overall markets are down 1 to 2%. The drop is being led by Mac 7 companies today. Nvidia is down 6% as well. Just a quick overview of all the stocks that are down. Tesla down 6%, Nvidia down 6-7%. All chip stocks are down except for Texas Instruments. Consumer defensive stocks are up today. Pepsi, Walmart, Procter and Gamble, etc. are up. Technology stocks are all down. Oracle, Palantir, CrowdSource. Apple is flat, as you would expect in a recession trade. Today is a recession trade. Oil stocks are up though, because oil prices are up. Oil prices have been depressed. Oil stocks have been depressed for a while. So it's not a surprise. My only long is Oxy. It should be up today. Let's see real quick. Oxy stock is up 2%. Interesting is Starbucks is up. McDonald's are up. These are high quality names. There's a bit of a rotation going on from low quality to high quality, except for the Mac 7. Mac 7 are just overall overvalued, except for one of them, actually. I think one of the Mac 7 is not overpriced or may not be overpriced. I need to look further into it, and I might take a position later on. Let's read the Reuters article. Yeah, all indices are pushing down. Dow Jones is down 0.2%. Nasdaq is down 2%. S&P 500 is down 1%. Russell 2000 is down 1%. So it's mostly Mac 7 and chip stocks, really. And the meme stocks. Tesla is a meme stock. And a bunch of others as well, like Palantir. Etc. Yield curve is up today, up 3-4 basis points, which is interesting, right? We have discussed the possibility of longer end of the yield curve going up even as the recession probability increases. So this is what we might be seeing, and that is really bad for stocks overall. That is really bad for stocks overall. We might actually see valuation ratios drop way below what people expect, like the market valuation ratios drop way below what people expect. Tesla's pushing lower, down 6.3% now at $269 per share. We talked about Target yesterday a little bit. It's flat. Nike down 2%. It's still too early to buy Nike, but I'm looking into Target a little bit and haven't pulled the trigger yet. It's just I think there's a recession coming, so it's really hard to be long any stock in a recession. Even Oxy Petroleum, I kind of took it as a position as a hedge. If I'm wrong on my recession call, Oxy should bounce quite a bit, but if there's a recession, even Oxy Petroleum would be negative. All right, let's read this Reuters article. Give me 1 second. Wall Street falls as Trump tariff uncertainty prevails. Wall Street main stock indices fell on Wednesday, dragged down by mega-cap stocks as investors awaited clearer guidance on the Trump administration's forthcoming tariffs expected to be enacted next week. By the way, please let me know if there's issues in the audio on YouTube. There doesn't appear to be, but let me know if there's an issue. In the latest development A report said US President Donald Trump is readying an announcement on auto levies as soon as Wednesday. Auto stocks such as Tesla fell 5%, while GM and Ford were marginally lower. That's interesting. So that tells me it's not the auto levies or the tariffs that's driving. I think this is just a matter of valuation. Tesla stock should be trading at below $100 per share today. It should not be above $100 per share at most. If there's a recession, it could drop to $50 per share. And to those who say this is impossible, I say look at Amazon stock after the tech bubble. It dropped 95% while improving its profitability. Look back on the tape, you'll see that Amazon was improving its gross margin throughout the tech bubble bursting. And despite that, Amazon stock dropped 95%. And I think that's possible for Tesla, especially because Tesla's fundamentals are also deteriorating. In my opinion, Tesla is going to lose billions of dollars this year and likely next year as well. We're just watching a bubble bursting right now. I pinned this prediction at the top of your screens. I think Tesla will lose billions this year and next year. Let's continue with the article. The uncertainty regarding the scale of US tariffs, the possibility of retaliatory measures from trading partners, and the potential ripple effects on the global economy and businesses have kept investors on edge over the past month. However, investors also anticipated that Trump could soften his stance after he hinted that not all tariffs would be imposed by the April 2 deadline, with potential exemptions for certain countries, though the details remain unclear. This provided a degree of stability to Wall Street over the past two sessions, with the major indices reaching two-week highs. The S&P has climbed over 4% since the mid-March lows, while the Nasdaq has surged approximately 6%. The market is now on hold. Trump's softened tariff stance seems to have made a temporary relief, said Peter Cardillo, chief market economist at Spartan Capital Securities. Investors are going to be sensitive to tariffs. The White House keeps changing its position, creating uncertainty. Heavyweight growth stocks dragged the S&P 500, with Nvidia off 5.5%, Alphabet dropping 1.5%. 6 of the 11 S&P 500 sectors edged higher, led by energy's 1% rise. Crude prices climbed as investors priced in tighter global supply following the U.S. threats of tariffs on nations buying Venezuelan oil. Reflecting the cautious sentiment, a survey revealed a decline in optimism among top business executives in the first quarter. Okay, I'm going to look into that a little bit more. In anticipation of tariff-induced price hikes, businesses scrambled to build up inventories. Data show that orders for durable U.S. manufactured goods saw an unexpected increase last month. Further contributing to market unease, Barclays revised its S&P 500 target downward to 5,900 points from 6,600 points. Earlier this month, both the S&P and the Nasdaq had tumbled 10% from their respective record highs, a phenomenon known as a correction. The main focus of this week will be the Personal Consumption Expenditures Price Index, the Fed's favorite inflation gauge, due on Friday. I think it's going to come around 0.2%, maybe slightly higher than that. So we'll keep an eye on that. Minneapolis Fed President Neil Kashkari said he's uncertain about the effect of Trump's tariffs, with the possibility that they could push up prices, arguing for higher interest rates. That is insane. See, I hadn't seen that. We're going to take a closer look at that as well. I hadn't seen the headline. So Kashkari talking about potentially higher interest rates is a massive, massive hit. I'm going to see the wording on that. That seems highly unlikely to me for the Fed to say that. So Dollar Tree rose 5% after the discount retail chain said it is nearing a sale of its Family Dollar business to a consortium of private equity investors for about $1 billion. Interesting. Excluding the Family Dollar banner, the company reported quarterly net sales marginally higher than the previous year's figure. GameStop jumped 14%, following its board's unanimous approval to incorporate Bitcoin as a treasury reserve asset. So that, we live in a world right now that if you announce Bitcoin, you're buying Bitcoin, your stock price pumps 15%, 20%. A bunch of companies have done this. I mean, this is very similar to back in the tech bubble when people were announcing changing their names to .com and they would see their stocks pump. So this is yet another indication of an AI and crypto bubble that is bursting today. Declining issues outnumber investors by 1.8 to 1 on the NYSE and 2 to 1 on NASDAQ. All right. One second. All right. Let's read about this CFO optimism. CFO optimism dropped as Trump tariff plans unfolded, survey says. Optimism among company chief financial officers dropped in the first quarter as tariff risks and uncertainty began to cloud an outlook among business executives that had been buoyed by President Trump's election victory, according to a survey by two Fed banks and Duke University. On a scale of 0 to 100, average optimism among around 400 CFOs, key players in the corporate spending, investment, and pricing decisions that can influence the direction of the economy fell from a pandemic era high of 66 at the end of last year to 62 in the current quarter. So this is quarterly. I mean, the economy changing so fast that a quarterly survey, I don't know how informative that is, but things really deteriorated at the end of February and throughout March. The index fell as low as 50 during a pandemic surge of inflation, but had risen to around 60 before jumping 6 points following Trump's election. Only one sector, construction, showed rising optimism since then, from 67 to 68. Optimism among CFOs in manufacturing, the sector Trump said that he will help taxing imports, fell from 67 to 62. The drop seemed tied to rising concerns about the uncertain impact of tariffs and Trump's efforts to rewire global trade. CFOs now anticipate slower growth and higher prices. Okay, I mean, there's nothing new here, and it's dated information. Uncertainty and trade policy were clearly on the minds of CFOs. Not only did almost 1/3 of the respondents report concern about tariffs, those responses had notably lower optimism. The CFO Service tracks the recent drop in conference board survey of consumer sentiment, which fell in March to a 4-year low, with households fearing both recession and higher inflation. Yeah, that's the one that matters. Okay, that's that. And now let me just read Kashkari reviews. Minneapolis Fed Reserve Bank President Neil Kashkari on Wednesday said he's uncertain about the effect of President Trump's tariffs on the US economy, with the possibility that they could push up prices, arguing for high interest rates, and the chance that they could slow economic growth, calling for reducing borrowing costs. Together, those forces are kind of a wash, he told Detroit Lakes Chamber Economic Summit, meaning that the Fed should just sit where we are for an extended period of time until we get clarity. So that, another indication that they're not going to move on in May. Let me just look at the CBOE Fed Watch real quick to see what the probable today is. It should be, I mean, close to 0% at this point, although we have 42 days. So it's at 12%. I think it's way too high. I don't think they're going to move in May. Let's see. Kashkar's comments reflect what appears to be a widely held view at the Fed. Hold on one second. Kashkar's comments reflect what appears to be widely held view at the Fed that there's no rush to cut rates. Jerome Powell also signaled last week after the central bank held short-term interest rates in the 4.25% and 4.5% range. Optimism among households and business leaders plummeted in recent weeks as Trump has laid on new tariffs, later suspending some, but also promising more to come next week. Consumers and corporations fear higher prices could lead to more inflation. Those fears were on display at the event, where Kashkari conducted an electronic poll that showed that the keywords members of the audience used to describe what is driving the economic outlooks are Trump, tariffs, inflation, and uncertainty. Some of the policy uncertainty that you all talked about in your word cloud is complicating our analysis of the economy, Kashkari said. Indeed, Kashkari said the drop in sentiment could slow households and business spending even more than the actual tariffs, which so far have been only partially rolled out. That makes me nervous, he said, and the longer the hit to confidence lasts, the more meaningful the impact on economic activity. The good news is that hit to confidence could be restored quickly if there are resolutions of these trade uncertainties. The U.S. Central Bank has made a lot of progress bringing inflation down, but we have more work to do. The biggest challenge for us right now is to finish the job. Yeah, so he doesn't say anything about higher rates. Probable to higher rates is just de minimis. And let me see what the what's priced into the stocks of a probable to rate cut here. Rate hike by the end of December. The probability of a rate hike is essentially zero. Yeah, there is none. If I look at July, none. Yeah, so that's just not going to happen. Even if I look at next year, there's no rate hike probability. Okay, so that's that. Let me check one more thing here. Yeah. Okay, that's good. There's something about conference board that we can read. I'm not going to go into that for now. Let's read the headlines here on Tesla. On Tesla related auto industry, Nissan still in partnership talks with Honda. Tesla drops FSD and autopilot names in China. Interesting. Canada bans Tesla from upcoming EV rebates. Just more fallout of economic political activism by Elon. More automakers pool with Tesla in Europe. Let's see what that's about. Rivian spins off secret micromobility business. BYD wants to double overseas sales. At BYD, I don't think people realize BYD is producing today three times the automotive production of Tesla. So I don't see that changing. I think it's only going to increase in the next year or two. BYD is only now starting to expand into certain countries and building factories around the world, which Tesla has a factory on basically every major continent, every major area, including China, Europe, US, etc. And Tesla has the opposite problem. As BYD and other Chinese automakers gain market share, Tesla has excess capacity today of about close to 50% of excess capacity now, which is critical. I mean, if it gets any worse, the gross margins will turn negative. So that's basically the situation that Rivian is in today. So BYD and Xiaomi, Xiaomi has very successful products named SU7 and YU7 that are eating into Tesla's market share in China. And Xiaomi is going to expand across the world starting in about 2027. So by the end of this decade, unless something changes, I don't see how Tesla automotive survives in China or Europe. So it might just be limited to North America, but we'll see how that goes along. The one way I can be wrong on that is FSD progress accelerates. With the current rate of progress, I don't see robotaxis coming before 2030. And by now, Waymo and others will have expanded to a point where it doesn't matter, even if Tesla gets there at the end of the day. Other headlines: Aurora doing AV tests in harder conditions. Waymo racking up expensive parking tickets. Let's look at that too. Okay, Tesla emissions pool add Honda, Suzuki, and Stellantis, Toyota, and Ford. Tesla's 2025 EU emissions pool is now official, with Honda and Suzuki this month joining Stellantis, Ford, Toyota, Mazda, and Subaru in buying credits from the EU US EV maker. Okay. Um, Honda, Suzuki, Stellantis, Ford, Toyota, Mazda, and Subaru. Okay. And then Waymo Robotaxi racked up $65,000 in San Francisco parking tickets last year. Waymo's fleet of vehicles tooling around San Francisco can drive themselves, but need human intervention to pay their parking tickets. Okay. All right. Okay, so that's that. That's the end of that. Let me see if there are other. Tesla drops FSD autopilot names in China. Let me see what this is about. After rocket rollout in FSD system in China, Tesla is dropping FSD from the name of the system while it faces increased scrutiny from the regulators. I mean, these scrutiny from regulators, governments around the world is only going to increase as long as Trump continues to put these walls around US. There are many ways governments can retaliate, and this is one of them. Last month, Tesla started rolling out a limited version of its FSD system in China, finally allowing driver assist features to be used on urban roads in the country after a long wait. Tesla is facing competition from Chinese domestic manufacturers. BYD recently pushed a software update giving smart driving features to all its vehicles for free. This is surely part of what pushed Tesla to roll out FSD system in China in the first place. But immediately after the rollout, Tesla drivers started racking up fines for violating their law. Many roads in China are watched by CCTV cameras, and fines are automatically handed out to drivers that break the law. Clear that the system still needs more work. Yeah. 5-10 years away. All indications point to that, except for what biased influencers say. All right. I don't have anything else to say. Any questions, comments, please request to speak. Otherwise, we're going to end the space. I'm going to give it a couple of minutes. All right. On that note, thank you very much, everybody. And I will chat with you all next time. Take care.